Today's session outlook, we have a lot to talk about, especially for what's to come this week. First of all, let's start with this, that the dollar actually slid from the opening over the weekend and of course went to a near 2-month low against most of the major currencies. And of course, on Monday, what we saw is concerns that were mounting on the chances of US fiscal stimulus after, of course, President Donald Trump failed to push through a healthcare reform bill. Of course, that was expected. Some of you might say that was a done deal. However, we saw how many of his own party actually started to doubt what he's about to do. And of course, in result, dollar went down. Of course, it received a lot of pressure, especially from the starting of the week. We can see the gap in the euro versus the dollar. That's just a 1-hour chart from the opening. Of course, the Republican president, whose own party controls the Congress, and of course is already raising doubts among it whether he will be able to push through the tax reform and of course the quote so-called mega tax reform. Anyways, before we actually move to the charts down here so we can see what's happening since the beginning of the trading week, today there is very little on the fundamental side of the market. However, from tomorrow is starting the S&P Case-Shiller Home Price Index. Of course, most of what we're going to talk about is with moderate volatility expected, but having the fact that Donald Trump failed to push through tax reform, the healthcare bill, which is a major issue for the dollar, we can see a lot of upside into the rest of the currencies versus the dollar, and of course commodities such as gold. Oil, of course, is standing on the sidelines. Right now, we're looking for tomorrow the American Petroleum Institute's weekly bulletin about the crude oil stockpiles, and of course on Wednesday we're looking at the consumer credit change and mortgage approvals for UK, and of course the major headline, which is the UK government, which is of course ready to trigger Article 50 for Brexit. That will happen on Wednesday. Right now, today, markets will be focusing on what's to come throughout the week, and most of all, it's basically how the markets will be pricing in for today throughout the week. We will find out what will happen on the most important days, and this is on Thursday and Friday, where on Thursday we're looking at the consumer confidence, service sentiment, business climate, economic sentiment indicator, and of course industrial confidence for the European Union. We're also looking especially for Germany, the consumer price index, the harmonized index for consumer prices, and of course for the weekly job data out of the US, and also gross domestic product along with personal consumption expenditures, which is of course a major data. Also, we're looking at throughout the week a lot of speeches from Fed officials, which of course will carry major weight on what's to happen throughout the year, especially when we're looking at least 2 more interest rate hikes. For more interest rate hikes, of course, if the Fed is bringing such an outlook into their own speeches, and that of course would mean that we could see some strength on the dollar. But that of course also depends on what would happen on the local soil, speaking of the Republican Party and the President Donald Trump. Also, we're looking on Thursday for major Japanese data. We're looking at the CPI data, we're looking at job applications, unemployment data, also overall household spending, and of course industrial output, which is of course a major data for Japan. Also, throughout the Asian session on Friday, of course, early, we're looking at the non-manufacturing purchasing managers index and manufacturing PMI as well for China, which is of course going to influence a lot on gold prices and of course on the dollar debt. Looking at the unemployment rate out of Germany, also gross domestic product for the United Kingdom, a consumer price index out of the European Union, and of course looking at the personal spending, Chicago Purchasing Managers Index for US, Michigan Consumer Sentiment Index, and Baker Hughes oil rig count. You can see, ladies and gentlemen, a lot of inflationary data that of course could tip the scales of the next federal interest rate hike either way. So right now let's focus on the charts here briefly to take a look at what currency pairs and commodities are focusing and doing today. For the rest of the week, looking at the euro versus the dollar, as I mentioned earlier, 1.0820 was the key level from where we see that market started to gain today. So far is about 40 pips up. We're looking at a gap of about 33 pips since the opening. Right now we're looking at a confirmation somewhere above that particular support level, but 1.0848 or 50. That would be a perfect case scenario for a continuous upside for the near to mid-term. British pound, same case scenario. That's mostly on the weaker dollar, ladies and gentlemen. We're looking at such a significant move. 1.2530 was the key resistance area from where it broke, and of course we're looking at another roughly 40 pips of upward direction since the opening. US dollar versus the Japanese yen, same case scenario, declining the dollar versus the yen, looking at about 60 pips of downward direction since its key support area 110.78 or 110.80. That's pretty much from last week, but since the opening this morning, we're looking at about roughly 8 pips of downward direction on dollar yen. Gold prices also were buoyed by weaker dollar after the struggle last week to sustain gains, mostly on, let's say, mixed US data, just ahead of the announcements of whether the healthcare bill from Donald Trump would have been, let's say, taken with applause by the Congress. Well, it didn't. Right now we're looking at a very tight, slight gap, about $1.50 roughly, since the morning, but from then on we're looking at $12 of upside direction on gold. Our upward direction was from last week, as the 50 exponential was still intact on the closing, and right now we're looking at a few targets achieved already since the morning, and that was from last week. Crude oil also looking at a sideways direction, as it were, not much of a movement over there, as the price is still sustained above the 47 key area. As we can see, $47 a barrel is one major support area. So right now we're looking at a continuous sideways direction. Markets are mostly looking for some kind of clues, ladies and gentlemen, out of the OPEC and non-OPEC producers to find what would be the next potential direction. Right now we're looking at a sideways continuous trade, so we're preferring to stay away from this commodity and focus on something more volatile with a confirmed direction, as we spoke a few minutes back. So that's the most important of today. Of course, stay tuned for our next session's outlooks, so we can keep you up to date with the most important market of today. That's all about it. So please like or subscribe. See you next time. Bye-bye.